Moving on, let's talk about mortgage rates and bond yields right now. We were on the phone with one of our mortgage brokers yesterday, and what was the word that he used? He called it that. He said something fascinating about bond yields right now, but they're kind of in a yo-yo pattern. They're up, they're down, they're up, they're down, they're up, they're down. And typically, bond yields are somewhat steady. That's what bonds are all about: is steady returns and steady income. Fascinating how bond yields have been going up and down, up and down. I want to get your take on this, but I want to set the context for the people watching the show. That keep in mind, folks, very, very important, that mortgage rates, fixed rate mortgages, are set by the bond yield, not by the rate that the Bank of Canada charges for their overnight lending rate. So when everyone's freaking out that the Bank of Canada is raising rates, that affects things like variable mortgages. It affects things like lines of credit. It affects other lending products, but it doesn't affect most fixed rate mortgages because those are typically fixed. They've been locked in, and that's based on bond yields, specifically 5-year bond yields. They've been going up and down, Patrick. Where were they? Where are they? And where are they going? That's what people want to know.
Well, I mean, bond yields, to your point, are up and down. So, the key to all of this is that, for those who are buying real estate, for those who are investing in real estate, you have to sit down with a qualified mortgage broker that can actually guide you based on what your vision is, what your plan is. Because if you're working with a bank, you've got the view of that specific bank and the broker. They're professionals, got it, but they're still, at the end of the day, you're going to end up getting a mortgage with that bank or not, if that's your decision. When you work with an independent mortgage broker and one who's investor focused and is an investor themselves, they're looking at all of the mortgage lending through a different lens. So the key here, work with an independent mortgage broker who understands. Where do we think rates are going? It's anybody's guess. Bond yields are at the effect of a lot of different things, and I think it's a guessing game to say anything more than, if I was to say, I think fixed rates are going to kind of plateau. They're going to stay right around where they are. So you can get mortgages now in 5, low 4s, depending on what you're doing. At the end of the day, I think they're going to stay right around here. It's going to be a year at least before we start to see them come down in a meaningful way. That's just my own view. And it's a guess at best. I mean, the banks don't know.
Interesting, though. I was talking to someone earlier this week about a mortgage, and they were telling me about a mortgage rate they were getting, mid-4s roughly. And they were asking me my thoughts on this. And I said and it was funny because they're a relatively new investor. And from their perspective, mid-4s was like, oh my God, I can't believe I'm paying mid-4s. And I was like, my entire portfolio has been built on mid-4s to mid-5s to low 6s. So you can't, mid-4s, there's nothing wrong with a mid-4 mortgage. There's nothing wrong with a mid-4. That's not high. We've been in an abnormal, and Patrick, you and I were shouting this from the rooftops. But it seems nobody's listening. Having a mortgage at 2%, 1.5%, 1.6%, 2.1%, that was abnormal. Having a mortgage in the mid-3s, mid-4s, low 5s, that's normal. And I think real estate investors, the faster that they adopted this new reality, and yes, mortgage rates might come down. Yes, they might. You might be able to get a mortgage at 3.8% in 6 months. But still, we're not going to go back to getting mortgages at 1.32% like we did 18 months ago. And that's the reality.
And quite frankly, I hope we don't, because it's not a healthy economy. It's not a healthy housing market when we did that. And we're paying a price for it. And don't even get me going on that. But anyways, I agree.
I agree. All right, mortgage rates and bond yields covered. We got one more topic, Patrick.
If you're interested in learning about investing in real estate the right way, look at our Real Estate Investing in Canada program. 15 steps to successfully investing in real estate. Thousands of real estate investors have learned the right way to invest in real estate following those 15 steps. You're absolutely going to love that program. Take a look. Click on the link in the description below.
I hope you've enjoyed this episode. Please like and subscribe. And if you've enjoyed this, please share it with someone that you know, because it's going to be incredibly valuable to them. Also, we'd love to hear from you, so please comment below. If you want to see more stuff like this, click here. If you want to see the entire show, click there.